Hello, everyone. How's everybody doing today? It is August 13th, 2026. We are taking a look at the markets now. The S&Ps and the NASDAQ are having a nice rip up today. And it looks like we are, I'm going to show you guys this. It looks like we're trying to have some type of breakout to the upside. If I take this chart here and I maximize it here, you can see how basically we have a central pivot area, the central value area here right at the 75.11 level. For quite some time, we basically traded around the 75.11 level for a extended period of time, and just recently we have had a nice run up towards the end of July up towards this swing high here from early June, which marks the upper end of the sideways range that we've been trading in the S&P 500, and we traded up just above that. Sorry, I just got a fill that scared me. We traded just above that swing high on the S&Ps at 77.41 level, and we've been in this little bull flag area since this buy climax right here on August 5th, and we've been in this sideways trading range, forming this bull flag since at this point on August 5th, and right now we are testing that swing high on the S&P 500, and we are looking and trying to break out to the upside. Now, do we get above this level and get some follow through to the upside? That's what we want to see. We want to see follow through to the upside on strong volume as today continues. So far, we're testing this level in the morning. We may easily get some, back and fill where we have a pullback as we go into the lunchtime hour. But what we want to see is a follow-through move and a clear breakout to the upside in the S&Ps. Now let's now take a look at the NASDAQ. Very similar, but not exact. So you can see the NASDAQ has had previous highs all the way back to early July. So this bull flag that we've had in the NASDAQ is in this breakout that we're having right now to the upside. And as you can see, even though the S&P is just starting to break out of that bull flag, the NASDAQ has broken out of this high from August 5th, and that breakout is clear here. The only rub is that the NASDAQ is breaking out of this nice resistance levels here, right at 30,000 and change, right around 30,070 on the NASDAQ 100. The rub is that this breakout is not a new high. It still needs to trade above 30,600 on the NASDAQ 100 to make a new high, I think. Let me double check on this. Let me see here. No, actually it needs to get back up to a 31,000 even on the NASDAQ 100. We got to get above 31,000 even on the NASDAQ. So just to get above that swing high that we had, that it showed you earlier, just to show you to get above that high here at 30,600. That's not the actual all-time high on the Nasdaq. We still have to get above 31,000 on the Nasdaq to get to all-time highs. So this on the Nasdaq. This breakout here is just a move above these previous swing highs that we have here, going back to early July, and we still have a lot more to go on the upside in the Nasdaq, and that is kind of coincides with the main stock like Nvidia. We take a look at Nvidia here. I'm gonna go back here and go take a look at this chart here. Take a look at Nvidia here. Nvidia is making some very nice strides to previous, high levels, but just like in the Nasdaq, it needs to get above 236 to the upside. It needs to break out above 236 to the upside to move to all-time highs on the stock. Even though it is making recent highs, and it's had a nice run, moving from 190 a share up to 225, almost 226 a share. It still is off its all-time highs, and even below this previous swing high here from early July, where it traded up to 232. So this market is it still has more work to do to the upside. So we So with all that said, let's take a look at some stocks that I have been looking at today and trading today. First off, I do have calls in Nvidia. I own right now the 225 August 17th calls. These are the calls that I own here. August 17, 225 calls. They're trading right now for $3.25. So I own those calls in Nvidia, but I also own some calls that I bought in Robinhood. So let's check out Robinhood. And the stock is starting to make a move to the upside here. It's been beaten down for a while. It made a move from 120 down to 85, and now it's starting to finally make a move to the upside. We can take a look at another chart in Robinhood here with the Bollinger Bands and the oscillators. As you can see, it traded down to the lower Bollinger Band, and now it's made a move to the upside. And I like the way it bounced off of that lower Bollinger Band and traded right to that 20-day moving average, right as the oscillators made a move to the upside. I like the way the slow line has turned up and is now sloping up, and the fast lines have gone into the positive and are moving up. So I think that Robinhood can continue to move up towards at least this swing eye here, which is right where the upper Bollinger Band is. And I think that's a reasonable target. Now, you can make the argument that you're a little late to buying calls or buying stock right now because the stock is above the 20-day moving average. But I still think that, sometimes you don't have a choice, and you have to get in a little late. I think that's where we are right here with Robinhood. But I still think that you could even go up higher past that, level right around 108 or so, and it could easily go to 120. So I listened to the earnings call in Robinhood recently for the recent earnings call that was released, and I'm still very bullish in the stock, especially long term. And I think they've had some bearish action because they were taken down with other software stocks. Because technically, if you think about it, Robinhood is a software stock. I wouldn't group it. I wouldn't technically call it a software stock, but technically it's a fintech stock, financial technology stock, but technically it is a software stock. So as software stocks got sold off over the past couple months over the summer, Robinhood kind of got grouped in with those stocks. I think so did Palantir and so forth. So the stock has been beaten up, but it's acting well here. So I bought some calls. And let's see what it's doing right now. The stock is consolidating now after having a nice move up off the opening bell. Let's take a look at a 2-minute chart here. So the stock, had a nice move up off of the opening bell. It is consolidated here, but I like how it's going through a bull flag pattern as the day goes on, and it's making higher lows, and it's kind of a upward consolidation here. The lows are higher and higher, and it just needs to break out above this level here, right around 100, and I think it can make that move above 100 later today. So that's something that I'm looking at with Robinhood, for it to make a move above that 100. 117, 115 a share level. There are some stocks that I missed, because I bought calls. I bought calls in NVIDIA yesterday, and I had to roll those calls today. I bought calls in Robinhood today, and what I did miss is I missed the move in Micron. So there's been quite a number of stocks that have had some nice moves today. Micron has had a nice move today. And as you can see here, it's had a nice move. Take a look at the other chart in Micron. It too has had a move above the 20-day moving average after bouncing off the lower Bollinger Band. And I think that you can make the argument, just like in Robinhood, you may be a little late if you want to add to Micron here, but it's having a nice move today. It's up today. It can easily move up to that swing high here, right at $998 a share, right about where the upper Bollinger Band is, so it can make a move up there. The oscillators are now positive, moving up, and that slow line is trending higher, about to go positive. So everything looks good with Micron, just like Robinhood. So yeah, I like it. I didn't buy any calls today in it, but I like it. I'm gonna keep an eye on it. I may have to buy some calls later today on intraday pullback. Let's take a look at the intraday chart in Micron. Yeah, look at this. So I'm going to take a look at the past 2 days. Stock had a nice gap up yesterday, traded higher, pulled back in the afternoon session, and then bam, it's having another move up today. Looks really, really nice. So yeah, I like it here. And it's interesting is Micron's not having the same type of pullback that Robinhood has had today. Robinhood is kind of like consolidating here to a certain extent right here. So you have that consolidation, but Micron is not doing that. Micron is just boom, 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 higher. So all that looks good with Micron. Now, let's take a look at a few other stocks. Let's take a look at Palantir. I talked about that earlier. It's starting to have a nice intraday pullback today after a gap up, an initial pullback after the gap up, it gets bought, and now we're having another pullback after another thrust higher. We take out the highs from just after the opening bell, and now we're pulling back. So this pullback in Palantir, let's say it continues on for the next hour or so, give or take. This could set up the opportunity for some type of move to the upside. So you can buy it for a move to the upside into the afternoon session towards the close. Now, some people like a stock that has a pullback like this in intraday, and other people like a stock like Micron that doesn't have that intraday pullback. It depends on who you are. Apple's having a move today. It's having a nice move higher today. Let's take a look at the intraday chart on that, or the daily chart on Apple. Still had a nice move up, then it had a gap down, and it's just consolidating here. Let's take a look at this chart. I still think that Apple needs to have more upside action before it proves to itself that it can go higher. And another stock that I like to watch is SanDisk. SanDisk, just like Micron, traded above the 20-day moving average, and I think that just like Micron and Robinhood, you may argue that it may be a little bit late to buying it, but I still think you're good because it's above the 20-day and because it's below this little pivot swing high here at 1443 or so. I think it's a good buy here. I think you can buy SanDisk right here. But a lot of people that watch my videos can't afford a stock like a SanDisk. They can't afford calls on a SanDisk. So you can watch a SanDisk to keep an eye on how it's trading, which is there's nothing wrong with that. But one trading entity that you guys can easily trade is DRAM. Let's take a look at that. The chart in DRAM looks just like Micron and SanDisk. I would actually encourage people that have a limited amount of capital and they can't afford to trade a stock like Micron or SanDisk and want to trade an entity like DRAM, look at the SanDisk and Micron charts. Okay, let's go back for a little bit and take a look at the Micron chart here. You have the daily chart, you have the weekly chart. Then we take a look at a stock like SanDisk. Okay. You see the daily chart, the weekly chart. They look very close, almost identical. And so does DRAM. So trade DRAM using the chart on Micron and SanDisk. Do that. That's what I encourage you guys to do. You can also look at a few other names like Western Digital. Western Digital looks sweet. As you can see, Western Digital is a little different than SanDisk or Micron. Western Digital is bounced off the lower Bollinger Band, but it's still below the 20-day, so it has not yet made the same move as DRAM, SanDisk, and Micron. So maybe Western Digital is another play for people that want to trade in the memory disk space. And Western Digital looks perfect right here. It's right there, right at 495. That's a sweet spot buy point. Okay, so another stock I want to take a look at is AMD. Ooh, that's beautiful. Trades below the lower Bollinger Band, bounces back above it, and is right at the 20-day. You have the fast line oscillators going back into the positive, which is very bullish. And that slow line, long-term trend, is starting to turn up. And soon, if everything keeps going well, to be in the positive. The one interesting thing is that the slow line on the weekly chart is turning negative on AMD. That's not super bullish in the long run. It means that AMD can continue to go through some more consolidation over the long run. So keep that in mind. That this slow line in the weekly chart is turning down. That's not necessarily a bullish indication. It means that the momentum is starting to turn down in the long run. So that is something to keep in the back of your mind for AMD. Now, what could happen is that this could kind of come down and then start to turn back up. But what it does mean is that this consolidation that we're starting to see at AMD could still have further legs going forward. Let's take a look at the intraday chart in AMD. Looks nice. This pullback was bought very aggressively, and it's near the highs of the day. It's had a little drop over the past couple minutes. Let's see if it comes back and gets test that 496 level. But this is the intraday chart in AMD. Let's see here. Is there anything else that I wanted to talk about? CoreWeave has had a nice move recently. CoreWeave, as you can see, it recently had earnings, and the stock has had a nice move to the upside since earnings. You see that big gap up here on Wednesday, and today we're getting more follow through to the upside. Now, we're having an intraday pullback, but we're still getting that follow through to the upside. Now, let's take a look at the CoreWeave longer term charts to see what we got here. And this big down move that we've had for multiple months, this big downtrend that we've had for multiple months in CoreWeave has now been broken, and we're trading up after the gap, looking to test this 120 level. For CoreWeave, after this downward trend that we had for multiple months, I think it's very important that this stock stays above the upper Bollinger Band and gets to this previous swing high and retest these previous highs and actually breaks above it. So that's something that I think is important with CoreWeave. I want to see it trade back to 120 and trade above 120. Another stock that I like a lot and I've recently added to in stock is Marvell. And it's having a nice day today. Take a look at the intraday chart in Marvell. Gap up yesterday, further follow through today, trading near the highs here, testing the highs from the Monday session, very close to the highs of the Monday session, and we're kind of consolidating here after this morning run, forming an intraday bull flag in Marvell. Looks very, very, very nice here. So, so I did buy some shares in Marvell. I like the stock. I like the thesis and the fundamentals. So that's why I bought the stock. And another interesting thing about Marvell is they make the materials for the TPUs for like companies like Facebook, Google, and Amazon. So Marvell, in a way, is some diversification away from NVIDIA. Even though they're both in the same sector, creating semiconductors, there's kind of some diversification in a way, because in a sense they're competitors, because Marvell makes the products for TPUs and NVIDIA makes the GPUs. So there's some diversification in a sense, in a world where everything is either an AI trade or not. It seems that way right now, right? It's nuts. And I think that it's going to be this way for quite some time going forward. So the Marvell is getting close to the upper Bollinger Band, and I think it has some more upside to go. I think I'm just going to stay with it, stay bullish with it, and look for more upside in Marvell. Um, I've heard that the South Korean market is now technically in a bull market. It wasn't a deep bear market as the hedge fund guy named Leopold was liquidated, and the South Korean stock market crashed, and a bunch of South Korean speculators jumped out of windows and killed themselves. Evidently, if they just you know took a deep breath and waited for maybe a week or two, they would have been okay. But that's an interesting fact that South Korea is already back into a bull market. Now, I want to see if there's an ETF that I can track South Korea. Let me look this up here. South Korea ETF stock ticker. The South Korea 3x bull ETF. The iShares South Korea ETF, EWY. Let's take a look at EWY. Right? Because in South Korea, it is like a bubble there. The whole stock market is Samsung and SK Hynix, and all these people that are in South Korea are like margining up their accounts and speculating and stuff. It's actually it's crazy. It's lunacy. And this recent down move in South Korea, it's in lockstep with the DRAM chart and Micron chart and the SanDisk chart and so forth. But you get this move, and everybody in South Korea has these leveraged accounts, and they're all margined up. They lose all their money, and then a bunch of people commit suicide there. And now we've had a nice bounce back. And as you can see here, South Korea is back to the upper Bollinger Band, and it's kind of back into a bull market now. We're not at all-time highs in South Korea. We still have more to go, just like the DRAM chart, just like the Micron chart, but bouncing back very nicely. So that's the big lesson there. You can be bullish in something, and if you're not margined up, if you're not leveraged, you can ride through bear markets and pullbacks and sell-offs and just wait it out. And even if you have cash on the sideline, when everybody is jumping out of buildings, that's when you go and add to stocks that you're bullish in. And I hate to say it, but this is like a perfect example of what they say, of what the people that have been trading for 30, 40, 50 years say. They say everybody's jumping out of buildings. That's when you buy stocks that you're bullish in for the long term. And everybody's selling. That's when you buy. So that is what's going on there. Let's go back and check the markets today. This is an intraday chart of EWY. You see a nice move up. Let's go back and take a look at the S&Ps. Ooh, we're starting to sell off a little bit here. Nice move up, and again, we got to that point where we were testing the previous resistance levels, the previous swing highs, and now we're pulling back from that level. So go back to what we were talking about earlier. I'm gonna take a look at a 10-day, 1-hour chart. You can see how you have this resistance level here in the S&Ps, this swing high here. That's a marker, and we hit that level, and now we're starting to pull back a little bit. We ran up into it, and now we're hitting that level where we can't break out to the upside. And since we go back to the 2-minute chart, since we're not able to get follow through to the upside, and we're having this pullback here in the S&Ps, and we're also having it in the Nasdaq, not to the same extent, but we are having that, and we're getting this reversal, and we're getting we're getting this reversal, and we're not getting the follow through that we want. That means that we're still in a sideways range. Still in this sideways bull flag sideways range type of market that we're in. Okie dokie. So I have to take a look. I'm looking at this reversal here. Go back to the 2-minute chart here. Hold on a second. Okay, so we're getting this reversal here. Check in my positions. Let's do some work here. So my NVIDIA calls that I've rolled are underwater by a little bit, about 23%, 24%. And NVIDIA is reversing a bit from the highs. I'm gonna hold on to these. I'm gonna hold on to those a little bit. We got, let's see what else we have. I bought the calls with Robinhood. Those are down by a bit as well. Those are down by about 14%. Getting a reversal. The big question right here is this reversal that we're seeing it in Robinhood here. We're seeing it in, take a look and see Palantir here. We're seeing it in NVIDIA here as well. Here, NVIDIA, and we're seeing it in the overall market. Is this reversal? Does this have legs? The fact that it's happening when we hit that pivot on a higher time frame and we're unable to get follow through to the upside. What I was kind of betting when I bought those calls, I'm betting for follow through to the upside. I'm going to hold on to these calls for now because the market may need another chance to break out to the upside, but it may not happen. It may not happen. So, but sometimes you just have to, like, even though the trade's not working, I still have hope that we can break through to the upside. And it may not happen today. It may happen tomorrow on some type of news or some earnings event or something. Another stock that is interesting is SpaceX. SpaceX is down by over $6 today, as you can see. It has been selling off all day. After multiple days, we have up moves. Go back and take a look at the 10-day, 1-hour chart. See, the stock is at a nice move to the upside. And I was looking for more move to the upside, but then, no, not today. We're down. And stock is down today, but we are having had a nice bounce off of that 105 level on SpaceX. So after the past couple days of upward action, I was looking for more follow through to the upside, but we're not getting that today. Um, so I don't know what SpaceX. I was open to the idea after yesterday's move. We go back and take a look at the 2-minute chart of the past 5 days. After yesterday's move in the days before, I was very open to the idea of buying calls in SpaceX and looking for this move to continue to the upside. But with today's action and the way the stock is now down to 140, it's now below 140. I'm kind of taking a step back and seeing how it trades from here. Let's take a look at the options on SpaceX. Got 475,000 options traded, 228,000 calls. More puts are trading, 247,000 puts, and a majority of the puts, there's a high percentage of puts that are being purchased, traded at the ask, and are being bought. So, it's just all everything to keep an eye on with SpaceX. So I just go back to the chart. Just keep an eye on this. I'm gonna keep an eye on this name, and I'm open to buying some calls in SpaceX if it makes a move. I think at this point, I want to see after this pullback that it's had that started yesterday. I want to see it get back to like 149.90 and break through that. If it gets up towards that or close to that, I may buy calls looking for a breakout above 150 for a move to 155. So that's something that I am interested in with SpaceX. Let's see if there's any other stocks that are interesting. Well, we mentioned all the memory names. We mentioned the Korea stock market. Let's take a look at SK Hynix. Big move to the upside today. 163. So it's had a nice move recently over the past 2 trading days, today and yesterday, to the upside. We can take a look over the past couple trading sessions. Let's take a look at like 20 days of a 20-day chart or a 15-minute 20-day chart. Just so you can see how it's traded. It just started trading on the United States stock exchanges as an American Depository Receipt, ADR. So it doesn't have a big history of trading on the chart because it just started trading on the U.S. stock exchanges. But we take a look at this chart as a good barometer to see where the stock has been. It's been above 175. It's been down below 130. It's been at 125, and now it's at 162. So it's closer to the upper part of the recent trading range, and it's having a nice move to the upside along with the other memory stocks. So it's nice to take a look at just to see what's going on. I'm not inclined to trade SK Hynix anytime soon, but I'm keeping an eye on it. Let's go back to S&P 500. Getting a little bit of a bid here at 78.20. Kind of this down move is kind of pausing here, but I want to see a move back up and retest the high of the day and get follow through to the upside. I want to see this bull flag. I want to see the market break through this bull flag that it's been. This needs to break out of this. Right now, we're in a drawings. Right now we're in a box, and we need to break out of this box. We need to get above this We need to get above this this pivot here, and breakout, and that's not a resistance. It's only one data point. Right now, it's just a pivot. But yeah, you have this resist. You have this. Hold on one second. Let me get rid of this. This is the resistance. This is the sideways. Range that we're in, and it doesn't take a genius to see that. So we got having trouble getting above that, breaking out, and having a nice clean breakthrough to the upper part of this sideways range. Because if you don't break out above the upper part of the sideways range, the risk that we go back down and test the lower part of the sideways range is still there. Once you get a clean breakthrough to the upside on strong volume, then you're done. Then you can go on to the next level, the next markup level in a market. So let me remove these drawings. Just want to show you guys, give you a visual representation of where we are in the market. Let's go back to the 2-minute chart so you can see what's going on. I'm getting a little bounce here, and that's about it for today. I think I don't have much. Don't have much to say. It's a pretty quiet market for the most part. We had CPI inflation data yesterday, and it came in right as expected, right as everybody, right at the estimates. Whatever the estimate was, 3.4%. That's what it came in line. It came in at, so it was in line with expectations, and the market just traded up on that. And today, we had a nice move to the upside. We're testing the resistance, backed off of it, and we're trying to trade up back to it. I am going to stay online. So you guys can take a look at the charts and see. You can look at my watches. You can look at my charts and see everything that's going on. But I'm going to turn off the camera and turn off the microphone. Kind of said everything I needed to say. One more caveat is that that I heard from listening to other traders is that right now the market that we're in, volatility is very low. Okay, you can take a look at the VIX. It's down below 15, and it hasn't been below 15 for quite some time. As you can see here, in recent history, you look at where the VIX is now, and you look at where it's been over the recent history, over the past year or so, we are at these very low levels. So complacency in the marketplace is starting to really build in. That's something to keep in mind. To know that the market can continue to go higher, but we are at a point where complacency is building in the market. Take a look at the VIX, the volatility of volatility, which is basically this index. I love to look at this. Everybody talks about the VIX. They talk about the VIX. They talk about the VIX. The VVIX tracks the volatility of VIX, call options, and it gives you a very clear representation of where we are as far as complacency and fear in the marketplace. the VVIX, when it's above 110, that shows that you have lots of hedging in the marketplace because they're buying the VIX calls, and it kind of means that that's when you get kind of a feedback loop of hedging in the marketplace, and a sell-off can really gain legs and keep going. But when you're above the yellow line, it means that there's hedging, but it's not too aggressive, and there's lots of cautiousness in the market. But the stock market is continuing to go higher and can continue to go higher. But when you're under the yellow line and you're at like 88, like where we are now, that's confirmation that there's lots of complacency in the marketplace. And from what I've heard, listening and talking to other traders, right now, take a look at the SPX. I was gonna sign off, but I get on these tangents. I can't help myself. I'm a market junkie. We can take a look at the SPX chart here on a daily chart, basic chart here. We're at highs, try to break out and make another leg higher, like I discussed earlier. Lots of complacency, and take a look at the skew index. We're at 136 right now. So basically, this is how much puts are more expensive to call options. And as you can see here, let's go back. Let's see if I can go back like 2 years. So this is a 3-year, 1-day chart. And I'm going to change the style on this chart to I'm just doing this for the skew, so you guys can see it better. Change this to a line chart. Ooh, that's much better. Yeah, that's visually much better. As you basically can see here, you go back 3 years at the skew index, there have been times in the past where the puts in relationship to the calls were much, much more expensive. And right now, they're pretty cheap. So in the grand scheme of things, basically, big picture context, puts are very, very cheap. Volatility is cheap, and calls relative to historical norms are very expensive. So market participants are buying calls and are more concerned to a large extent about a crash up than some type of massive sell-off at this point. And I think what happened is after the whole Leopold hedge fund blow-up, a lot of market participants are saying, oh, that black swan event that we've been worried about just happened. So now, as everything is continuing to go on, and the market's going on its merry way, now that we've cleared the rubbish from a black swan event like the Leopold hedge fund blow up, now we can go back to focusing on the market that is in front of us, which is AI or not AI, and that risk of a big upside move that blows out, the traders that are selling upside call options. That risk is now back on the table because the black swan of someone blowing out has already happened. So that's what's happening in this marketplace, and I think it's fascinating. So that risk of a crash up is kind of back on the table. That's what the markets are saying right now. But in the same regard, you can make the argument that, when everybody gets super complacent, that's when you have a big down move. So keep everything in hindsight. Just know what's going on, and see how the market plays out. That's why we come to the screens every day, just to see how this movie plays out. We never know anything. And if you think that you know everything, you're going to end up like that guy Leopold, who was a genius. He worked at Anthropic. He had like a 160 IQ, but he blows out. With all that said, I am going to sign off here, and I'll keep my screens on for a little while longer. Take care, everyone. Be careful. Don't end up like Leopold. Keep your size small. Yes. Trade small. Any other chart other than the skew, I cannot have a line chart. I like to have my normal style here. Is that what I had? Did I have a bar chart or? Anyways, that's it.